Hello, folks. Welcome to Pro Trader Strategies. We're an educational company. So if you want to learn about trading options, the markets, all of that good stuff, please hit that subscribe button so that you'll get first notification when we are going live. Also, please smash that like button. It does help us out. And finally, comment over there in the side there. I will try to answer any questions, comments, or anything else throughout this webinar. So please feel free to reach out over there. And without further ado, my name's Eric Wilkinson. I've done a lot of market analysis on mainstream media. That's the same thing I'm going to do here for you folks in these live videos, but I'm also going to talk about option strategies I find to implement around these underlyings. All right, so let's talk about the markets. We've got crude oil moving a little higher here. Remember, earlier this week, we saw a larger than expected drawdown of 5 million barrels. We only expected about 3.3 million barrels. So 2 million barrels over expected there. That's a drawdown. That means there's less supply, right? We're still seeing large demand. That's why we're seeing crude oil move higher here, despite the fact that we're actually seeing a weaker dollar right now. So that's really crushing gold futures here. Let's get on. I forgot to share my screen, folks. So let me back up here a little bit and try and do a share screen real quick for you. Let's see here. It takes about 3 or 4 steps. I should get this done before we get started here. And like I said, a lot of steps. Allow. There we go. Dollar strengthening here. So we're seeing gold, which is dollar denominated, and an inflationary hedge. So we're seeing two sides of the coin here right now. We're seeing inflation start to really ramp up there. Is it transitory? Well, it looks like, folks, with all of these supply issues, it's going to back us up close to 2 years. That's just from the Panama and the COVID. So we are really jammed up right now. Panama Canal getting backed up there. So with all of that said, is it really transitory? I'm starting to feel like this inflation is here to stay. When we're starting to see restaurants and businesses raise prices, yeah, they're saying it's transitory. They're not going to lower those prices, folks. Nobody ever does. So that said, we're probably seeing inflation start to stay here. That's going to probably get the Fed to start increasing interest rates a little bit sooner than later. Bonds aren't really reacting that way, though, so far. We'll see that here in a moment. But Bitcoin, $300, like almost no move whatsoever. Summer markets really feel like they're in full swing. Today, a Friday, it's a rush to the Hamptons. Afternoons, we used to say on the floor that as soon as noon hit, you could just watch the volume just kind of get sucked out of the room. Bonds here coming off a little bit today after yesterday's big rally. We were talking about that. That was a pretty big move yesterday. Looks like now that we've broken below that 1.5%, basically 1.2% is the next stop where we're going to see some resistance there. So that is in the 10-year notes here. Now in the bonds, bonds are very similar as well. We can see that show up. What's leading right now, really the 10-year, and the bonds are following. But you can see the charts look almost identical across the board there. And then we move over to the VIX. The VIX is starting to get back down to those levels we saw in basically 2019 before COVID hit. We're starting to see that volatility back in the teens now, which was considered to be a little bit high back in the day, right? Before we saw this volatility from COVID and everything else, the teens and going into the 20s was high volatility. And you can see we haven't seen those teens in quite some time. So volatility really getting sucked out of the markets. We've got NASDAQ positive on the day, but really quiet. Like I said, one of those days probably to sit on your hand if you are a day trader or even just a swing trader. Today is a day really watching for setups, how the market feels going into the close. But at the end of the day, it's going to be a little bit dicey with the lack of volume, I think, today. I think it's really going to get a little bit more dicey, probably risk to the downside in the equities at this point is what I'm saying, just because that lack of volatility. We're at these all-time highs. We just printed all-time highs in the E-mini S&Ps. That's going to be a real signal for a lot of people to start covering some of their profits from this massive move we've had to the upside. Like I said, for the rest of 2021, I think we are going to stay in a relatively tight range. We're not going to see this like parabolic move that we've seen over the past 12 months. I mean, that was just a massive parabolic move. I think we're going to kind of calm down in and around this area. We'll see some sector rotations going on, and ultimately at the end of the day, we might be at the end of the year plus or minus a few percentage points on the year. So time to start looking for some of those opportunities where they didn't, take in these meme trades and weren't really getting the news. Those guys are lagging. We can find some opportunities out there. I've showed you a few already in Sundial. Those guys have been making some moves, some really cheap, flyers that you can mad money with. All right. And that's about it. Please take a moment to check out our disclaimer. We're an educational company. I'm not trying to get you guys to jump on these trades that I'm doing. And finally, hit that subscribe button so you guys get notified when we are doing these videos. Smash that like button or take that. All right. Bye for now and take it easy.